Everybody's doing good. I wasn't going to stream today, but I accidentally hit the stream button on my stream deck, and I looked up and it was streaming, and I had folders everywhere. So I guess since we're here, I might as well go ahead and go through with it. I'm going to turn this music down just a little bit. You guys let me know if it's too loud on your end, and I can... It's a little bit too loud? Yeah, I can turn it down some. Again, I've got it in my ear, but I don't know how it sounds in your ear. Yeah. So it looks like they've filled this gap here. Again, I'm messing around with some stuff, so the bar coloring is, again, a work in progress. There are some other influencers on X that sell chart books that show quote-unquote delta readings, but they're really just an RSI plotted over the volume delta, and so these are quite a bit different. They're really like momentum bars based on the deltas. And again, I'm working on tying it all together with the tick as well. So to actually, you know, have something that's simplified that that people can use. Even though right now it looks kind of jumbled up, it's a mess. But there is a tick divergence here. Again, this is just Nasdaq tick, 250 trades. I try to keep everything like as far as I mean, I have like TPO that I look at quite a bit. I just like the look and feel of a TPO chart. It's just nice. Just nice. I also look at, again, this chart book's a mess right now because I've been back and forth on it. I do pay attention to VWAPs, historical VWAPs, and kind of where we are at in outer space, especially previous day, previous week, previous month, previous quarter. But for the most part, this is kind of my entry setup, something similar. What you guys are seeing on stream is not the same chart that I'm trading on my end. I have a widescreen monitor, so I like to trade on that. And this right here is really just my laptop screen that you're looking at today. So I'm still kind of torn about streaming and trying to do it in a way that is not intrusive in my own trading and my own personal life as well. I'm a pretty private person, being prior military, so I don't love putting my life out there, and I guess I really don't have to. But there's also a part of me that's like, I really don't like putting my edge out there either, but yeah. So, here we are. Yeah, it is. And I'm working on simplifying it. I mean, I want it to be something that I've spent a lot of time, some of you guys know, because we've talked about it, a lot of time back testing, working with AI, and just hours and hours and lots and lots and lots of data, figuring out, order flow, like legit figuring it out. What are the statistics behind it, day to day to day to day, and interpret it in a way that's kind of easy to follow. And it's tough. It's tough. It's a lot of work. So I guess I don't mind showing it like this knee because it's kind of bits and pieces of it. It's not like a, you know, finished product. So, and I was hesitant to like, you know, put everything together and ask people to pay for it, but I might get there. I might get there where I'm happy with it and it's easy. You don't need any of the colors or any of the stuff. Like it's all just me kind of, you know, tweaking things and I'm gonna. It looks like we have a fair amount of kind of absorption here, but we're also pretty high up. Why is this thing? Oh, it's only got the last 30 days. We're pretty high up on the food chain here. Could certainly keep going, but I feel like we're probably due for a pullback at some point. So I'm going to close this before. Before FOMC release. And I don't have, I mean, I guess they're not like doing a speech or anything today, so they're just going to release the meeting minutes. So still quite a bit of selling pressure on this, right? And we can see the tick. The tick's been diverging, so it might take a swing lower here. Right now, this is RTH low on the trades delta. I'm not used to showing my entire laptop, so that's kind of screwing me up a little bit this morning because you guys are seeing stuff that I don't want you to see. Oh, it's all right though. Oh, uh, SP, I had been kind of in a position there for a minute. Again, this is just I wasn't in a position there because I was like, ooh, this is a really nice setup or anything like that. It was I just happened to be long from down here still. Or I'm sorry, I entered it up there because there was a little bit of laminar order flow movement, but it didn't really do anything. So let's see what we get here. I'm going to zoom in just a little bit. Kind of hoping that they take this low out here and a lot of selling. I'm going to take a short here. So our ticks below zero. Quite a bit of, you can see kind of the acceleration. Man, this is some really intense music here. Hold on one second. I think we might get another little push lower here, maybe. I say that, and so I like that strong tick reading there. Let's see if we can get another little leg down here. Quite a bit of acceleration on the downside, so let's see if we can get another little push and a sweep. When I say sweep, I don't mean like a liquidity sweep or anything like that. Please don't confuse my terms with influencers in the space. See if they pour on some more selling here. Yep. Come on, boys, sell it on down. It will lighten up as we get more toward the bottom, but it's back to neutral. Kind of watching this area right here to see if these guys break through their lows. If they do, I might add. Unless the buy-in totally flips right here, which is certainly possible. They're kind of building. Let's see. I'm going to take that off just because again, you start thinking like, oh, we've got this low right here. Right, and you're thinking, oh, they have to sweep that low. Like, no. No, they don't have to do anything. Be curious to see if they start breaking these highs. Our trades delta is above the volume delta, so that's always generally I take that kind of as a sign of absorption. We do not have alignment with the tick though. The tick is still bearish. So again, I'm hoping that it sells, but I'm also not really willing to eat a big loss on this just yet. Oops. So let's just give it a moment here to see. We're still very much inside of this range, right? This kind of value area. There's no point in us playing with it just yet. We want to see it sell hard, right? Sell hard, see our divergences. So just kind of watch it. You can see that there is a lot of, there's some buying volume that's starting to build aggressively. In my mind, though, I know that there's that low to the left, so it's like, all right. Do I trust that this is... We might get some laminar flow out of this. Of course, it can turn on a dime. It did kind of put in a new high there. I don't like buying on pushes in the tick. I'd rather buy on a pullback. Let me, how can I do this? I want to change this real quick, guys. Just a second. I know it looks a little funky right now, but part of me was getting a little paranoid about having my laptop on display. Again, this is not normally how I do the stream, so you guys just have to bear with me here while I tinker with this. No, we're just gonna go with that for now. All right, so we had a strong push down to the tick, but it hasn't really rebounded that strongly. Just my gut's telling me that it's going to go lower, but we'll see here, unless the order flow really shifts. Tick is popping new highs. I think we got plenty of time and space here, though, to just kind of observe it. It's bullish. It's looking bullish. Let's try one long here, just because things are starting to... We've got alignment with kind of order flow and tick. I don't mind trying it. Again, not like an A+ setup or anything like that. It's just, let's see if they are serious about lifting it from here. I'm going to erase this because we know that it's there, right? We know that we're in a bounced area. So just because we see a lot of or some aggressive buying doesn't mean that, again, that it's going to necessarily translate into anything. See, the order book is making new highs though, so. And I know that these bars are kind of hard to see. Let me, I'll do this for you guys. It's just that they're based on again, the kind of order flow momentum. So they get brighter. They get brighter the more intense that it gets. Okay, so like this one, you can see that this candle right here is nice and bright. I would imagine those are sell stops that are being run. Should I be listening to an FOMC meeting somewhere? It just says FOMC. Oh, okay, hold on. Here, let me kill the music.
Jerome Powell, he's going to be asked again. The Fed votes 10.
Oh, okay. I didn't realize that they, here's the... Well, here is the live feed. Okay, I probably should have waited a little bit. I just thought it was kind of like an announcement. You can see that there is... Oh, we're kind of neutral. That's why things are murky right now. I'm a little bit out of the loop. I didn't sleep much last night. I'm going to close that and take that little ding until the account's at 11,400 in profit. So I'm gonna wait, excuse me, till he starts talking. We're down to 3 viewers. If I had to guess, I would say Hyperwolf, Charles, and Nee are still here. Is that who's still watching? I can't tell on my end who it is. It just says concurrent viewers. You guys are getting the raw, unfiltered SpecOpsTrader today. That's funny. Hey SP, I'm glad you're still here. It just says that I've got 3 viewers. So again, I can't see who it is. All right, let me get my head in the game here. I knew that there was FOMC, but I was just thinking that it was. See, because I go off of this thing. Can you guys see that TPO? I assume that you can. So I'm looking at this right here. The little news plugin. And so usually it says federal funds rate. I guess it does say press conference, but I don't know. I guess normally I'm used to it saying Jerome Powell there. I don't know why it's not, but anyway. All right. Well, let's listen to Jerome here and see what he has to say. We are trading inside of today's balance. We've got all kinds of poor structure for your TPO auction market theory guys. Once he starts talking, you guys let me know. Here, let me do this for you, if you guys can hear it. We do window capture. There we go. So there's a lot of guys that are like, I don't know, YouTube gurus, influencer types. I like to just listen to the actual source itself without somebody else's commentary as you listen to my commentary. But we'll keep that up. Let me put that on top. There we go. Yeah, it looks like the ticks want to sell off again. And like I said, let me know if that's too loud or too soft. They've just got music playing right now, so. Oh, that resized the whole thing. Hold on. still working on my hotkeys, the stuff on my end, so bear with me. Alright, you guys should be able to see that okay. Whoops. Okay. We've got about 8 minutes. What? I gotta keep that up. Okay. Alright, I'm not gonna be able to see your chat, guys. Until after the excuse me. Until after the meeting. So just erase that. Guess I could take this time to figure out why my... I used to be able to pull up the chat in OBS as a doc. And for some reason, I can't see the chat doc anymore. DOCK. I can see the scenes, sources, but there used to be a chat doc here. I'm gonna, can't even change the whole. OBS chat doc missing. Let's see what Google comes up with here. Oh, you guys are seeing that too. I don't want you to see that. Nobody wants to see my Google search. Whoops. I don't think I was supposed to do that. Got about 3 minutes here. Hmm. Okay, fascinating. Let me see if I can do this. This might be kind of neat. If I can get it to work. I'll have to play with this later. Alright, we'll just troubleshoot later. Need to lock in. Time to focus. Alright, they're pausing the music. Maybe not. That was just a fake out. Alright, I can see chat again. You guys can see the video. I think we're good. So some selling momentum coming in. I would not be surprised again if they kind of when you see stuff like this happen, I mean, like, you can't tell me that there's not, like, insiders. I don't want to. This is good. This is really good right here. I like this. Let's see what he has to say. Let me know if you guys can hear it.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 percentage point, bringing it within a range of plausible estimates of neutral.
Well, I guess I can talk with you.
This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional
low,
adjustments to our policy rate based on the incoming data.
but then we turned around and got an equal and opposite high, which is a sell signal for me.
On a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
Well, we've just got a ton of volume here.
Delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Wow. What a short statement
at Associated Press. Thank you.
On his part.
I wanted to ask that you attended the Supreme Court hearing last week on the Lisa Cook case.
Here comes the political questions.
That as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs.
There's trade's absorption.
Which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material.
I don't want to
still there,
sell
but
off.
it's a tweak here and there.
Nice and hard.
Why we changed the statement? Let me pull it out. Was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting. And that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas. But I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
I know that not everybody feels the same way about JP,
Michael McKee from Bloomberg Radio.
but I like him.
Have you made a decision on whether you would
I like his
remain
demeanor.
as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
I bet you that he writes a book.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has.
So some of you guys have asked about
their role, their bailiwick,
delamination.
We do monetary policy and some other things, but we don't comment on the dollar.
You can
Sorry.
see how when
Chair
we
Powell, Neil Irwin with Axios.
we came
Obviously
down
no
here,
SEP in this meeting, but in light of the slight firming up of the
right,
language around growth in the labor
just to
market in the
about
statement,
there,
should we assume that the timeline for any further rate
trades
cuts
and
is
volume
pushed
delta
back
were in
compared to what
alignment. They
people might have
started to
thought in
kind of
December?
delaminate. Size started to kind of pick up a little bit.
First of all,
They're
if
still
you
in
look at the
alignment with each
incoming
other,
data
but
since the last meeting, clear
you can
improvement
see
in
where the
outlook for
size
growth.
is starting
The data
to.
have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a.
I have found that
on
the
a
trades
solid
delta
footing
usually
for
kind
growth.
of leads things
Inflation
around.
performed about as expected, and as I
So
mentioned,
right
some
now
of
the
labor
trades
market
delta
data
has
came
just
in
been
suggesting
flat.
evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data implications and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rates, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. And maybe I missed by one, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision.
Gracious, that's not a good statement to hear. Nobody knows with any precision. Well, what the heck are y'all doing?
Some officials have described the Fed being in
Like,
a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no,
I think that we all still agree that policy feels restrictive. Like, we're still within the value area, right? The range of COVID restrictions on our economy. I don't know. I feel that way. You guys may not, but I know my grocery bill's basically tripled.
Fed funds is running just a little below 3.65%.
So
you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data.
A bit of buying.
We're not making decisions about future meetings, but we do think we're well positioned after
just kind of subtle
to let the data speak to us.
Amira. Thank you, Chair Powell. Amira Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to have probably both diminished a bit. So we'll be looking at that. It's about how you weigh the risks to the two goals and how big those, and quantify them. And so there are different views on the committee, and we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
So
a lot of it has. So
I'm gonna take a long here on this.
And they're all highly uncertain, but
I'm just gonna, again, I just see this kind of momentum building here, and we're just gonna go with it.
That's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a hard problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, you'd get, and you would, I mean, inflation core
might still get a whip lower,
just a bit above 2%, x the effects of tariffs on goods. And the
but
other good news is, if you look away from
I'm
goods,
curious to see how this plays out.
In all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests
sorry,
that
my 3-year-old just yelled.
It's not stabilizing, that in fact the downside risks reemerge, or the data just get worse.
So quite a bit of buying there. Again, it could just be some short covering.
President Trump does pick a new Fed chairman before May. What does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate. That the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come.
All right, so we're getting a little positive tick reading here.
Around Liberation
I think
Day,
that
fully retraced in the last few months. So that's
looks like they've
longer term
made a decision.
Expectations have remained in places that are very consistent with 2%.
I try to
inflation over time.
catch
So expectations have been solid, and they reflect
a little bit of a pullback and
confidence
try to
in
add
the
into this
return
some.
to 2% inflation.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side.
Kind of buying this low volume node here.
We haven't made. You're right. We saw the labor market weakening, and we acted. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think that the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market? Deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want.
Remember when reporters used to go to news conferences and they just had like a notepad and a pen? Now they all have laptops that are like connected to whoever is paying their salary. Ask their questions here.
Says that the rates are in a good place. We'll have to be making similar judgments too on inflation though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is it?
I'll add one more here.
Could raise rates rather than simply remaining on hold. What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Just kind of bought that tick pullback there.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen
filled
the
that
Japanese
little
bond market a lot of turmoil recently, in part due to concerns over their fiscal.
Filled that little
and
low volume
economic
node that was like right along in here.
Do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
So we got good flow up.
You've seen that U.S. rates have remained.
This is what I was telling you guys, right? Look at the tick.
Really for a while, but they haven't.
Look at the tick. Look at the order flow.
Happening in Japan.
want to sell one, two.
It's more of an overtime thing. The U.S. federal budget deficit is
The account's at
controversially
13,651.
unsustainable path. The level of debt is not
And I'm just
unsustainable.
gonna kind of
It's very
hold
much
this until
sustainable,
we
but the
get
path is unsustainable. And
like
the sooner we work on it, the
some
better.
divergence here or something.
Right now we're running a very large deficit at
Right now, the three of them are in alignment, or the four of them.
The fiscal picture needs to be addressed.
Tick,
And it's not really being
price,
addressed. So,
and our
that's
order
important.
flow.
I'm not
And the
big
order
fan of
flow is starting
making it
to
some sort of near-term market event, but ultimately it's something we'll have to deal with. And
They're all
in the end game,
right.
that's where
This
you
is
wind up,
laminar
in some kind of a
order
difficult
flow.
thing. But that's not where we are. It's not what Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, I mean, technically, higher.
Just
longer-term
using
rates
this
means
fixed
less
range
denominated
volume
financial
profile. I
conditions,
know
but
some of you guys like
remember,
delta
many
profile,
things move longer-term rates.
but
It's not-
just to
it's not mostly what happens on the
kind of
short end that
see
can be
where we
effects of
want to
longer-term
be a
rates
buyer and a
from
seller at,
moving our
right?
policy around. But,
Focused on this
if
part
you
right here. I'm
mention
not
more,
looking left. I'm not guessing about
some of
what's
the
to the
fiscal
left or
path
any of
and
that.
fiscal policies and risks and things
Just
like
know
that
that these,
move the 10-year around.
if
You
this
can
move is
look
going to
back at
continue,
find
these
periods
low
where
volume
we've been very
nodes
actively
should hold.
moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it
So
started.
I'm not adding
So
again this
it's not-
time.
There's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
I'll stay on until the
Thanks
meeting's
so much,
over.
Lisa Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair,
Hello, Elizabeth.
until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement.
Now we are at
that
26,200, so
well, and that is to have a separation between
pull back in
to
the
not
tick.
have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that,
There is a little
first of all,
selling
really hard to restore
kind
the
of
credibility of the institution.
deceleration here.
If
So
people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed.
she's
to
got a
that,
little
and so are my
sarcasm in her
colleagues.
voice, huh?
Archie Hall from The Economist. On that sort of stabilization of the labour market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labour market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast
This
clip of
should
growth
hold.
over the last
I
couple
mean,
of
again,
years,
this
driven by
is.
immigration, and then the halt being driven
I
by
look at this as
a very
recent
sudden stop in
volume,
immigration.
right?
So
Important
many outcomes
volume.
were possible
It's got
with that.
recency.
Supply came way down. It turns out that demand for labor also
Should
came
hold.
down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's
Needs to
a
poke
maximum
through this little
employment economy?
point of control right here,
It's
which is this orange line.
It's a very challenging and quite unusual situation.
Thanks. And one more on.
I kind of marked out the pocket here with these two horizontal lines.
How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal.
Everything's still in alignment.
Right. It's financial conditions, and it's fiscal policy for 26.
Most part.
But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but. The economy overall, growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative, and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
By 1, 2.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is
this is an eval. I have a personal account that I trade micros on.
Economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way.
See if it breaks this POC here.
Broadly, on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so
So that little high volume node there held. If it can pop through this, then it'll keep going.
You mentioned the AI build-out as being positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases
One right
productivity,
there.
which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising
We're
productivity.
13.4K.
And we always ask, well, this is going to be different. Is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off.
So it's built out all this volume below us here.
When they do that. So we're all watching and learning, and it could certainly have pretty significant.
But it also just put in quite a bit right there. So
our society, we don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3%, 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9-month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So
Has there been a rupture?
I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far, we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal
I got to work on the
tailwinds.
coloring.
You've talked about big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but
when I close it,
it depends on how fast potential output is growing, right?
Definitely.
In principle, I'm not saying this is what's happening, but there's
outlier
growth,
here,
there's
bar on the
potential
selling side.
and
So
at a time of high productivity
see if
growth,
I can get
potential
this to
output
look
is
a little
rising.
better.
So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple things. One is, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Another is that our window into democratic accountability is Congress, and it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention if any, you pay to those moves, and what message you may take from these significant price increases we've seen for precious metals?
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind, Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right?
This feels a little weak to me.
And that's the basis for how we think about the economy.
Kind of a weak recovery.
And the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that...
Hey, what's up? It's all right, Jake.
Technological renovation.
I actually accidentally hit the button earlier, much earlier. I was fiddling around with my charts and tweaking some studies, and again, it's kind of like a combination of charts that I'm actually looking at and then what you guys are seeing on stream. So this is just a working chart right now. So again, there's a lot of stuff on here that I don't normally have on stream, but I just kind of went with it, and we've been streaming for, gosh, 2 hours and 43 minutes now. So
and it changes the way you think about
I'm gonna take a short here.
growth, labor market, and all those things.
Kind of against the grain, but we've got this
If it's just a question of using better models, bring
order
them on.
flow
Where are they? We'll take them. But
dripping down. There's a divergence. We got tick kind of accelerating lower. We'll see if we break this.
and we're always looking to do better at that. But that's
It's
how I
kind of
think about
counter trendish.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time.
You could tell this girl's really happy to be asking him questions. It's like the first time she's been called on ever.
our staff has done a really nice job on that.
That's cool.
And they've kind of put it together in real time. So as I mentioned, a tariff gets put in place. You can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely. We're done? We're done. Okay. Thank you very much.
All right. He's got 2 meetings left as the FOMC chair, and we'll see what comes of it. All right, so finished the eval up. I started it this morning. Traded it pretty aggressively, but we finished up $13,388 in profit. And I'm going to probably just close this one here. Got quite a bit of, again, it's just a little counter trend trade against the grain here. Thought maybe this divergence would pan out, but I will probably be back on tomorrow unless something crazy happens, and try to get this thing funded and continue on with the Zero to Hero challenge. Appreciate you guys tuning in. Again, this was just kind of ad hoc today. I didn't even realize that I was streaming. I was fiddling around with my chart books and folders and stuff, and I was like, what's that little red dot there? And I realized that it was recording. So all right, you guys have a great day. Appreciate you guys. Y'all be safe this afternoon. Don't do anything dumb. Don't oversize. So, all right, fellas, y'all have a good day. Talk to you later. I'm going to close this.